financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Lee. It's actually been the longest winning streak that we've seen from the market since January. We've seen 4 consecutive weeks of gains, and the big question is, can it continue? Part of that move has been a rotation from some of the lower risk assets to higher risk. But with the dividend season now in play, has this hit a roadblock? And finally, earnings season, how's it playing out and what to expect? Well, here for their share market insight, we have 3 very special panelists for you tonight. We have George Boubouras from UBS Wealth, Andrew Page from Team Invest, and also Michael Kodari from Kodari Securities. So if you've got a question about shares, our phone lines are open and we're now waiting for your call. The number's just on your screen there, 1300 30 34 35, or if you prefer, you can also email us on yourmoney@skynews.com.au. Well, it's been a fantastic ride for the market over the last month, and I guess the big question for a lot of traders and investors is whether this run can continue. So let's ask our panellists. George, just starting off with you. I mean, the big focus of the market this year has been fixed income type of securities, and I know that your portfolios have been doing well because they're highly weighted towards some of those dividend stocks as well as the bond area. What are you seeing now? Are you still heavily weighted towards defensives?
Yeah, well, it depends on your risk appetite, expected returns, whether you're targeting capital gain versus income, and the franking. So it's very much a different story for different investors. The reality is, in the June quarter, there's been this real heavy chase for high-yielding stocks. That's just intensified, and they become very expensive, of course. Obviously, we all know that people are paying more for the 28-cent dividend for Telstra today than what they were doing 6 months ago and therefore a year ago. So obviously that defensive in nature is still there for some people, but at the same time, cyclical is extraordinarily cheap, and that's the point. So it depends on, it's a combination. So there's a rotation going through, but it depends on what you want to do coming up with the dividend. Do you need income or you're targeting capital gain? The reality is a bit of both. But most portfolios, the reality is you've got cash and fixed income and defensives in the equities and cyclicals.
So a bit of everything. Michael, do you agree? Are you targeting your clients towards certain type of sectors and stocks, or what would you
Our view of, I guess, of the market now is, you know, we see a lot of, I guess, households sitting in cash, and since the GFC, they've withdrew about $67 billion off the market. Now, I guess there's a fair bit of fear within the market, and we are simply at this stage looking for companies of value, which is very hard to find. And for us, it's basically a great management team, great fundamentals, and a great business concept behind the company.
Okay, and Andrew, what are you looking for in this type of market?
Yeah, I'd agree with that, actually. I mean, the thing that we do at Team Invest is we tend to look for the same thing no matter what the market's doing. I mean, quite frankly, I think that you should always be invested in businesses that have extraordinarily defensive earnings. I mean, people tend to think that the trade-off there is that if you're in a defensive, the compromise you make is very low returns, but of course that's nonsense. And I think a good example of that is Woolworths over the last 12 months. It's, you know, it's netted nearly 20% when you factor in dividends, and that's probably one of the lowest risk businesses out there. So I think low risk businesses are always good, and you always, of course, want to buy a business at the cheapest price possible. So whatever the market's doing, that's what you should be doing.
Okay, so we've got a bit of everything. Andrew looking at, I guess, fundamental stocks and looking at high-yielding stocks that have performed well over the last 12 months. Michael also looking at strong fundamentals. George loves fundamentals as well, so it does look like we have a triple whammy, but still well diversified because there are still people looking for safety out there in the marketplace.